SoFi Q4 earnings are right around the corner, January 29th, in fact. But I wanted to make this video to talk about the expectations for what I believe is going to be presented on January 29th, or at least a reasonable explanation for what we might see. Now, I've been covering this company for years now, absolutely fallen in love with it. But that being said, seeing this many quarterly earnings from this company has allowed me to sort of predict what I think will be able to come about whenever we're looking at the financials of this company. So let's just jump right into the numbers and we can see what we have. So, first off, we have numbers going all the way back to 2018, as well as my predictions for 2024. Now, I've already done a video covering all the things that I believe are going to happen in 2024. This is mainly just for this quarter, but let me just tell you about how we even have all these numbers for 2023, because 2023 hasn't reported yet. So let's go down and I'll show you guys some of these numbers, make it nice and quick and simple. Okay. The way we get these numbers is pretty simple. A lot of it's just easy math. And so we have to just judge a couple things. It really breaks down into three simple sections that we have to judge: members, products per member, and then we also have to judge each individual sector for how they might report on a products per member basis. We need to break it down into their bottom line. So that is exactly what we did. Luckily for everyone, SoFi is a pretty linear business. As you can see, whenever looking at their margins for their financials, everything has been pretty linear up and to the right, very slow growth. Even net incomes at the bottom there, that orange line, although it's still in the negatives, we do have some assumptions going off of what management has said. They believe Q4 is going to be a profitable quarter. So we can expect that those margins are going to continue up and to the right. They also believe, that EBITDA margin into the distant future might hit 30%, net incomes into the 20%, but that's pretty much there. Another expectation that we can do: products per member. Now, this has been as straightforward as possible, around 1.5 products per member. Then, whenever looking at products per financial service, it's been up and to the right, very linearly. Lending has been up and down, but still the trend line holds pretty steady, as well as a very similar thing of technology services, not really boating anywhere. Like, it's getting more and more stable as time goes on. Now, with those expectations, we are able to go into SoFi's forecasts for Q4. Now, this is 2023. We know Q1, Q2, and Q3. These numbers are concrete, okay? What we don't know 100% is this number right here. Now, new members I have right now pegged at 620,000 new members, bringing SoFi's total member base to 7.5, almost 7.6 million users. That would be a growth rate of about 8.9%. The product numbers is a little bit more sporadic because it's really based on this number right here, products per member, which I have pegged at the exact same number that we saw from Q3. If I'm being very particular, I actually think it'll climb a little bit as the large number of users that we saw from Q3 continue to sign on to new products, because that usually takes some time. So the later people that have come onto the platform, like maybe in September, for example, may not have fully rounded out all the products that they initially want to sign up for. There are going to be some products as we go through that are going to see larger growth rates than others. But before we get into that, I wanted to just talk about the expectations that SoFi is seeing versus what my chart is seeing. What we can already see, and I'm going to go up here, and I really want you to focus on this column right here. And so for that, I'm actually just going to hide 2024. I actually have expectations going all the way up to 2030, but that's not for today. Whenever we look at the 2023 numbers, what we can see is that revenue is at 2.055 billion. As well as EBITDA is another one that I want to focus on at $366 million. If you go ahead and look at the EBITDA and revenue expectations for SoFi for the full 2023 of what they said back in October, what we can see is that they actually expect EBITDA to be at 386 million at the low end, up to 396 million. Revenue, on the other hand, we're a little bit closer. They say about 2.055 billion to 2.065 billion. So if we're even just getting into the middle point of their expectations, we're still 5 million off, okay? If we go back in history and look at SoFi's earnings, what we can see is that they've had a beat and raise strategy for every single quarter that they've been a part of. Meaning, whenever they say guidance, it really has always passed the upper end of their guidance, both on EBITDA and both on revenue. So, with that being said, I wanted to look back and say these expectations for revenue is very conservative and EBITDA is so far off. We're not even in the ballpark, right? We need an extra $21 million just to get into their low end of their guidance, let alone beat it. We need to probably get to near 400 million. Okay. How do we do that? Why am I so far off from their expectations? Well, let's take a look. So, this could be a factor of a multitude of things. One, I don't have enough new members on the platform than what they're actually going to bring on. If we raise this, say, to 700,000 and then go back and look, well, now revenue is now closer to their high end of their guidance. The only thing of the reason why I'm actually putting it lower than what we saw last quarter is that Chris Lapointe, the CFO of the company, told us as investors to not expect high member counts going forward, that we won't be able to do 700,000 plus, and it'll probably be in the areas closer to 500,000 going forward. But that seemed a little low for me. So I cut it in the center, about 620,000. Now, that could be the case. One, they could be sandbagging that number as well. Less members could lead us to less revenues, less profits, all that. Now, also, if I go back, what I should have showed you, if we also look up, this would also increase our EBITDA as well, okay? Just by a little bit. So then the next thing that I wanted to show off was potentially products per member could raise. Let's say if it went back to, 1.512 or whatever, back when it was during Q1. This would also bring up our total amount of products, which would then translate into new revenues. But as you can see, this is with the extra 0.01. I'm going to take that off. It barely did $1 million. Okay. I don't think that it'll be that drastic to say that this number could go up, but it's not going to make that much difference. And I don't think that we're going to break into something like 1.6 members per product or anything along those lines. That is too drastic. That being said, whenever we look down at EBITDA, however, this is another one that I think is worth looking off. And in fact, I'm just going to circle it because I should have. Their margin for EBITDA is another very important factor. I put it as 20%, following this trend line of growing EBITDA, right? If we look back, that it would rise up to the 20% mark, kind of in line with their trend line. Okay. Whenever looking at this, in order for them to reach the amount that they need to get into their guidance level, right, which would be about 390 million, we may need to rise this by roughly 24%. That would lead us to a very low end, 25%. It completely breaks trend from what we were seeing previously. Yeah, that would be more, in line with their high side of EBITDA. Okay. So either we're going to see way more members than they've ever anticipated, or we're going to see margins that are way higher than anyone has ever anticipated. So that draws me to believe that SoFi has nothing to do other than to very well beat expectations in some form of another that completely breaks trend. And in fact, we're already seeing this in like technology platform, okay? I'm also adding a drastically high number of technology platform new accounts in order to boost that revenue, which was a part of their guidance. They did say that there would be a pretty significant acceleration in both Galileo accounts while also holding on to strong margins, which you'll also be able to see that here. So I've also increased the technology per account while adding a bunch of new accounts. You're going to see quite a large acceleration there. So let's break it down onto a per product base so that maybe you can see why I've expected these sorts of numbers in 2023. So just running through it, I don't want this to be too long of a video. Personal loans, the way I've gotten all of these numbers was mainly based on a percentage of new products, okay? Trying to hold trend with how many products that they've brought on to the platform, while also keeping in mind that there are some things in Q4 that are very different than the rest of the quarters that we've seen previously. In two main bases whenever it comes to loans. One, Home loans is continuously seeing an acceleration, but we still have to keep in mind that the macro is not perfect for home loans, nor do we really want a lot of home loans because they're a much lower return of equity product rather than personal loans. Same thing for student loans. Amazing product. There's definitely going to be an acceleration in Q4. If there's any number that I think I'm going to be drastically wrong on, it's going to be student loans. It might even be double what I'm suggesting. I'm not sure. It's very, very hard to predict without seeing the numbers, but I like to do this sort of thing anyways, just to get a rough ballpark. Same thing for the SoFi money products. I think that this product is the bread and butter of SoFi right now. It's going to continue to see an acceleration up to 36% or adding about 337,000 new products, okay? Leading us to 3.4 million checking and savings accounts. The deposits are just going to be out of this world, okay? Invest products are also going to hit new highs, 154,000. We're kind of seeing that across the board in different brokerages. October, November, and December were very good in markets. The more green that we see the markets, the more it actually brings on new people onto the platform. Plus, you have all these Swifties that we've brought on from last quarter to bring onto the investment platform. So the last 2 quarters of really accelerated member growth might translate into new invest products as well. So 16.5% of new product count. Then we have credit cards as well, adding a little bit lower, actually, 2%. It's kind of been on a pretty steady decline over the last little bit. It's a whole, like I could do a whole video on credit cards. For the people who have seen the channel before, you guys understand it's not the most profitable business for SoFi right now. They're not going to be pushing it. So I think that we'll see a little bit of a deceleration in that line. Referred loans also decelerating as well, just because the high interest rates are not allowing for us to actually refer loans out to less risky borrowers right now, or sorry, more risky borrowers, because there's caps on interest rates and the amount that they might actually be debt consolidating might actually be too high. Anyway, I'm getting way too into the weeds. I believe that it'll be a little bit lower. Then SoFi Insights. This product is one that has absolutely taken off in the last little bit. My number here might also be extremely low, but it was based on new product counts. So it could also continue to hold up this 36%, but maybe we're drastically low on the total product counts versus other quarters. Let's say that we're right on the total members and total products. I do think that it'll be about 36% of total product counts, adding an additional 337 new products. And SoFi at Work, same thing with student loans. As student loans accelerate, so will SoFi at Work. Then in 2024, I believe that SoFi at Work will have an amazing year because of Secure 2.0. Not going to get into that, but it is very important to understand. So, quick recap for everyone, okay? I believe that SoFi will add 620,000 new members, but the amount of revenue that we actually, or the amount of EBITDA just to get into their, their expectations might actually lead us to believe that there might actually be another quarter of like 700,000 plus new members. I'm not sure. That or products per member is far off from what we think. Maybe it is 1.6. Maybe they are cross-selling at much higher rates than what they've previously been seeing. There was an old management quote that actually said that they probably don't see themselves getting out of 1.5 members per user until about 2028. So if we're not expecting to see acceleration there, it's probably due to total member numbers is where they're seeing an acceleration. Or like I said, just a massive increase in EBITDA margins. However, I just can't see it. I see 20%. It's in line with this complete trend. Net income positive, by the way, this quarter for the first time. 1% margin is what we're believing. Well, I'm believing. Nearly about $6 million of net income. But that's the full prediction. It's pretty easy, actually. Judge how many new members there are, judge what amount of products per member there are, and then judge the amount of revenue per product that you're actually doing per segment. It's actually not that hard once you see it broken down into a nice little calculator. And then also taking their in-trend margins that they're expecting with a little bit of extra help from management's guidance. That's it for today, guys. I really do appreciate it. If you want more content like this, make sure you guys like the video and subscribe down below. We do daily live streams talking about stuff just like this.